Good afternoon or good evening, depending on where you're watching this from. Thank you for joining the Taxed and the Brits in Dubai webinar. We'll be going through a couple cases in terms of moving to or from Dubai from the UK, and then all the kind of personal tax, and then even kind of a few kind of company tax implications, mainly looking at if you were to move out to Dubai. My name's Ard, and I'm one of the founders at Taxed, and I'll pass over to Eamon to introduce himself while I get the slides up in the background.
Perfect. Thanks, Sarge. Thanks for joining, everyone. And as mentioned, I'm going to be discussing today the implications from a tax perspective of moving to Dubai or living out in the UAE. We sort of spent a good few years working in international tax at PwC, and hopefully across the next sort of 40 minutes or so, we can give some really useful tips to everyone watching this now or later on as to how their taxation is going to work from the UK. So I guess we dive straight into like residence tests and so on, or is a few more people joining?
Yeah, I think so. I think we can go straight into the different tests in terms of like what makes you a UK tax resident. I guess they kind of start off with, right, like a lot of the questions that we get either on the kind of Facebook group or just kind of as kind of tax advisors is, how are you taxed, right? And as if you are classed as a UK tax resident, you are then taxed on your worldwide income. I actually had someone this morning message me on Facebook. They are working in the UK and out in Dubai, and they spend, I think it was like slightly over 90 days in the UK. So they just pass a test to be a UK tax resident. And what that means is all their earnings from Dubai are still taxable in the UK. So it's really key to understand how and what makes up your tax residency. So I guess to that, I'll pass over back to you, Eamon.
Cheers, Arj. So I guess from a residence perspective, we have something known as the statutory residence test here in the UK. It's essentially a set of rules where if you meet the conditions for being a non-resident, and obviously you'll be classed as a non-resident and only be taxed on UK sourced income. And if you meet the conditions for being a UK resident, then you will likely be taxed on your worldwide income, which would include your UK and UAE income. So if we have a look at sort of some of the automatic tests which make you a UK resident, it's if you spend over 183 days in the UK during the tax year, all of your accessible homes are in the UK, and you spend more than 30 days in that home. And lastly, 75% of your work days are in the UK. So typically, right, most people just meet the first condition. If you think about it from a UK tax year perspective, if you've been there from sort of April to October, then likely you are going to be a resident for that entire tax year. And just like we have these automatic residence tests, we also have automatic non-residence tests. Now, these are, I guess, much more likely to be the case for a lot of people listening to this and individuals based out in the UAE and overseas. Again, three conditions here. One of them essentially is if you haven't been a resident of the UK for the last 3 years and you spent under 46 days in the UK, then you would obviously be a non-resident. If you were a resident in the UK in the last 3 tax years, so let's say last year you were resident of the UK, then you would have to have spent under 16 days in the current tax year. And then the last one, which is the most common we see across the board for people leaving the UK, is that you've left the UK to work full-time overseas. So you're working completely out there in the UAE, either for a local company or as a self-employed individual. And if you've left and working sort of full-time outside of the UK, then you can come back to the UK for up to 90 days. Now, the point here to remember is of those 90 days, only 30 can be for work purposes. So as Aj mentioned, you've got people who really get close to the edge and sometimes don't know about it until it's too late. So definitely, if you are based in the UAE and looking at, planning your travels back home or back into the UK, then just be wary of the 90 and 30-day rule. And the final sort of caveat to that test is, of those 90 days, you can't do more than 30 days in at once. So it's known as a substantive period of time. So if you are planning trips to the UK, keep them under a month, ideally, and just watch your work days. But most people, from what we've seen from our customers and who we've spoken to, come into the UK usually for a few weeks for the Christmas break and maybe summer for a few weeks. So normally are quite comfortably under the 90 and 30 days, but just be aware of it. So I guess if you don't meet any of these automatic conditions, right? So we've looked at what makes you automatically resident of the UK and automatically non-resident, then you look at something known as a sufficient ties test. And all that essentially is again, it looks at how many ties you have to the UK and how many days you spent in the UK. It's essentially like a cross check, and it's like a graph that if you have X amount of ties and Y amount of days, then you will be resident or not. So the ties to the UK are up on screen. So, for example, having resident family, working over 40 days in the UK, present in the UK even more than any country. And as you can imagine, the more ties you have, the more likely you are to be resident, and equally with the days spent in the UK. So there's sort of a chart. We also now have a residence calculator on our website on tax.co.uk, where you can actually check the status of your residence. So once the sufficient ties testing is done, that's sort of the final part of the SRT, and you are either resident or non-resident. And essentially what that means for you is, if you are a non-resident, then you will only be taxed on UK sourced income. So UK sourced income would be income such as rental, profits, dividends, interest, and any UK like work days, but not a UK salary. And we'll get into that in a second. But UK sourced income only. Whereas if you've done the residence test and you are a resident, then you're taxed on your worldwide income, which would include UAE sources of income as well. Perfect. I think what we'll do, oh yeah, sorry. So now, if you've got to the point where you know you're resident and you're thinking, hang on, I've done 7 months in the UK, so I've gone over my 183 days. Does that now mean that the final sort of 5 months of the tax year are going to be taxable? We can look into something known as a split year. And essentially what split year treatment is, I mean, I guess it's in the name, right? The tax year gets put into 2 segments, a non-resident portion and a resident portion of the tax year. So if you left the UK midway through the tax year and you've left to start working full-time overseas, then you can split the tax year, which is obviously known as leaving the UK, and you would put the condition that you're working full-time overseas. Now, just to note, you also have to be a non-resident in the following tax year if you want to split the tax year when you're leaving. So for example, if you left in November and you went overseas, you need to be a non-resident for the following April to April tax year as well. And just like you can split the tax year leaving the UK, you can also split it if you come back from Dubai. So if you've decided to come back home, or for any reason you're coming back to the UK, then if you, similar way, just on the reverse, if you were to come back into the UK in November, if you meet the conditions for splitting the tax year on an arrival, the earnings from April to your point of arrival in the UK will be not taxed if you'd be a non-resident, and then you'd only be treated as a resident from your arrival moving forward. So that's how the split year work. We get a lot of questions on that. A lot of people in the scenario, right, where they may have moved midway through the tax year just gone. You may be listening to this and you've recently moved to Dubai, and you're just thinking about how the taxes would work. So it's very likely that the sort of split year treatment always applies on the year of moving. So on the year you've actually moved either back to home or over to to the UAE. And that covers the sort of main areas of residence. So we sort of looked at, just to recap, quick few conditions on becoming a resident, few conditions on becoming a non-resident. If you don't meet those automatic tests, you get put into a sufficient ties test. Once that test is looked at, you get your final outcome, whether you are resident or you're non-resident. If you're non-resident, nice and easy, you're just taxed on UK sourced income. If you're resident, you're taxed on worldwide income. However, you do have the opportunity, if you are resident, to split the tax year if it's applicable to you. Yeah, and based on that is how you are essentially going to pay your taxes. Brilliant. So based on what we've just discussed, I think it's quite a lot of information to take in when it's just said to you over screen. So I think what we'll do is put a couple of use cases up on screen, a couple of scenarios to show it actually in practice. So the first example we've got here is Abdi, who's left the UK and now permanently lives out in Dubai. Maybe applicable to a lot of you guys as well. So what happens here, nice and simple, he's living in Dubai full time, visits the UK occasionally on holiday, doesn't work when he does come to the UK, and he's kept his home, which he did have in the UK, and rents it out. So here, quite clearly, non-resident, and the only taxable income for a UK self-assessment and what HMRC need to know about is his rental property. So next case we've got here is Sarah. So she's left the UK for 3 years, and actually sort of tags on to the point I was discussing around split year. So she's left on the 15th of November 2022. So what that essentially means is she's moved partway through the tax year. Now, because she's clearly done over 183 days in the UK, because if we remember, the UK tax year starts on the 6th of April. So from the 6th of April to the 15th of November, she's gone over 183 days and is treated as a resident. However, because she's moved to start working in Dubai, she can claim split year relief on the basis that she's working overseas. And what that means is she's treated as a UK resident up until the 15th of November, and a non-UK resident from the 16th of November onwards. So what that means is once she arrives to Dubai in November 2022, any income from that point onwards she makes in UAE, whether it be salaries or self-employment, would not be reported or taxed in the UK. Now, one thing I want to flag here is you can probably see that there's a random sort of 37 days written there where Sarah could come back to the UK. Now, the 90 days and the 30 days we talked about a minute ago are pro-rated based on when you leave. So because this is a mid-November move, then from the 15th of November to the 5th of April, Sarah could only come back for 37 days to the UK, of which 12 can be for work. So that's an example there of how a split year outbound would work. And then finally, a really important point we wanted to bring up today is if someone is to move for just a year, right? So in this sort of final case, we've got Chris and James, who are both off to Dubai for 1 year. So I think we got a slide for this, Sergeant, one after. But we have two scenarios here, right, where you can see here Chris left on the 1st of October and James leaves on the 1st of April. Now, what's really crucial here is that in one scenario, based on the tests we've just looked at, James is a non-resident, and on the other hand, Chris is resident, even though they have both gone for just 1 year, which just shows the significant importance of actually understanding the dates you move to the UAE and when you plan on coming back. If you're to move on the 1st of October, as an example, then essentially you're still doing 6 months in each UK tax year, and therefore you are going to remain UK resident. you can't split the year because you have to be a non-resident in the following year. So therefore, you've got 6 months in each UK tax year. You remain UK resident throughout that entire year if you leave in October, which means you are taxed on your worldwide income throughout. So if you had a large salary in the UAE, you're being taxed on all that income at the UK rates and have to pay that in to HMRC, even if you're based out there when you're working. Whereas if you compare it to the other case here, James, who left in April, because it's tied in with the tax year, which is obviously April to April, he's met that condition we looked at way at the start, where he spent under 46 days in the UK. So he's considered as a non-resident for the 22-23 tax year, and there's no tax on his earnings. So even though they've both gone for a 12-month period, if they earn exactly the same amount of money, one case here has to pay thousands in tax and the other one wouldn't have to pay any. So it's worth understanding the dates and making sure that when you go, you do break your residence, you are a non-resident, and you're not continuing to keep residence in the UK. And this is just from a tax residence perspective, but if you keep residence, it could end up costing an overwhelming amount of money. But so yeah, I think that covers residence in some detail. We've looked at a load of cases. If you do have questions, as mentioned, we have a residence calculator on the website. You can also book in a chat with myself, Arj, or a member of the team to talk through your individual circumstance if you're not sure. But that gives a really good overview of the sort of things you should be thinking of and looking into when moving. I think now I'm going to hand back over to you, Arj, I believe, just to demo our platform to show you how you would essentially record your residence on your tax return and file it with HMRC.
Nice. Thanks, Eamon. I guess just before I jump into the platform, as we kind of go through the software, the website, just kind of feel free to shoot any questions that you have on the chat. Happy to answer them, whether it's about sort of self-assessment, residency, claiming national insurance contributions, all of that good stuff. Feel free to shoot it on the chat. But I guess before as well, I jump into the software again, just to show you the tax residency calculator that we were talking about. This basically will go through those residence tests on your behalf. We just asked you a couple quick questions. For example, how many days you spent in the UK, and then kind of based on your answers, will help you to determine your tax residency. For example, if I hit here, I have spent over 183 days in the UK, I tick one of them automatic UK tax residence tests, and then I can see, right, these were my results. I can then get it emailed to me as well. Cool. So now the software itself, if you go to taxed.co.uk, you can hit the start for free button anywhere, and then that will take you into our software, which is designed to make tax filing super easy. We've myself and Eamon, we both come from that expat tax background, and for us, we saw firsthand just how many individuals found tax filing stressful. Not only that, most accountants will either charge you an arm and a leg, or they aren't really experienced in that international tax or expat tax filing. And I'm sure you may have seen that when moving to and from Dubai, especially I guess when it comes to filing taxes back in the UK. Although tax normally isn't at the top of mind when you're moving, but let's go with the software. So the way that we ask questions is super simple. It's almost like having a conversation with your accountant. So you can see here, we would just select that I'm now a resident of another country. And then if I hit next, we then ask some questions in terms of our kind of job status, what are our income types. So if you've left the UK, you're only taxed on UK sourced income if you do qualify as a non-UK tax resident. So then you'd only be declaring that UK sourced income. Now, what is UK sourced income? In general, it's things like UK sort of rental income, things that come from UK soil. So if you're spending sort of work days in the UK, that might be taxable, but also UK rental income is the common one. But I'll just flick through a few different bits that I think are quite interesting. For us, it's that residency section that, as you can see, we go through the automatic non-resident tests. And then we flick through the residence test, and we kind of do this in a way that's made to be super easy so that you don't have to look at the HMRC tax legislation, it will kind of go through and automatically kind of populate the relevant pages of your self-assessment tax return for you. These pages of the tax return as well, the SA 109 to be specific, can't be filed with HMRC. So it's one of those things where it can only be filed on paper, which is a pain, especially when trying to post something to HMRC or even receive letters from HMRC. And then we ask you about your ties and your number of days in the UK. Now, all this helped to build out the questions to determine whether you are a UK tax resident or not. In this particular case, as you can see, we've answered so that we have 2 tax residences. We are UK and UAE tax resident, and we're claiming split year treatment. To make it super simple, tax basically handles all the questions so that we ensure that you do qualify for split year treatment as you answer the questions. Now, the tax saving element. This is where we're going to look at the sort of rental or that kind of landlord section. So let's take a look at this property I added earlier, 10 Downing Street, and let's take a look. So for a lot of non-resident landlords, you may have had to file an NRL1 form. Essentially what this means is it's telling HMRC, I'm now a non-resident landlord. I have a property in the UK, but I don't want tax to be withheld. Now, many of you may have already done this or may not have done this. If you haven't, you will have tax automatically taken off when your letting agent pays you. So it's important to have it filed because it's good for cash flow. But if not, you'll get that tax is normally refunded when you file your tax return. So you can see here, we've just added in £4,000 worth of tax was paid on our property income. Normally it's 20% of your total kind of revenue of 24,000 in this case. And then let's take a look. So did you have any expenses? Yes. And this is where tax will suggest to you what kind of expenses you can claim when you hold a property in the UK. So it ranges from things like mortgage interest, which is treated as a tax credit. But for a lot of people that only have UK sourced income, you do get the full amount as a deduction because it's at that 20% rate. Mortgage arrangement fees, letting management fees, accountancy fees, and so on. We've tried to suggest a whole host of expenses to help you claim back on the various expenses that you might have when managing or letting out a property whilst abroad. Service charges, ground rent, and the likes. And hopefully that helps to save a bit on that tax bill. It's one of those things where we do always recommend to keep track of your expenses, but also you don't necessarily need invoices or receipts. If you've got a bank statement or bank transaction that showcases that the transaction took place, that is accepted by HMRC in most cases, unless you paid by cash, and then it's good to have that receipt as well. And then we've got some extra bits around driving and traveling to and from the property. But I'm just going to skip ahead. So we've now completed that rental landlord section. And then let's say that we have a tax refund here. We can see we've got a full tax calculation once the tax return is ready. So we can then see that in this case, my example is due a 2.8k refund because of the tax that was withheld at source. And we can see how we've kind of calculated that, right? For a lot of individuals that move out to Dubai from the UK, you would have a UK passport, and as a UK national, you are eligible for the UK tax-free personal allowance. So what that means is you've got £12,570 that you can make as a profit on your rental income without incurring any tax. So it's important to claim that to when you file the SA 109, even if you are non-resident, to claim that you are UK national, you've got the UK passport, and that helps in claiming back any refunds from HMRC as well if you've had tax withheld. So that's it. The only step after this is to actually submit to HMRC, which within the software takes a couple seconds. It instantly submits to HMRC, including those SA 109 pages around your tax residency. And then that's it. You're good to go. Your self-assessment has been submitted to HMRC. And that's it from a tax sort of demo perspective. So if you do have any questions on that, feel free to shoot them in the chat. The same kind of software applies also for limited companies, which we'll talk a bit about in a second. But I'll pass back over to you, Eamon, to talk about temporary non-residents.
Perfect. Thanks, Arj. So yes, as you saw there, a lot of you who do have self-assessment requirements, it's quite a straightforward way of submitting directly online. What I'll start with just before jumping into the temporary non-residents is just for you guys to remember the deadlines and dates. So obviously, as you know, the UK tax year runs from the 6th of April to the following 5th of April. So right now, the tax return that's due is for last year, 22-23, which ran from April 22 to April 23. And we are currently in the 23-24 tax year that ends in April next year. Now, once the tax year ends, you have until January to file the tax return. So the deadline is coming up, 31st of January 2024, for online submissions, where you would need to get your tax return in for the 22-23 tax year. So just to be aware of that, those are your sort of dates and deadlines that you need to file by. If you've left the UK and just started renting your property in recent months or last year, you will probably need to apply for a unique tax reference, which is known as UTR for short. It's essentially a 10-digit number that you need to have when you file a tax return. So if you haven't got one of those, it may be worth checking and applying via sort of Gov UK to get a UTR so that you can file your taxes by the deadline. So dates aside, we're now looking at sort of temporary non-residents. Why is this applicable to you? So I guess anyone that leaves the UK in the period that you are non-resident, as we discussed, a lot of UK income is the only sort of taxes you pay. Sorry, you wouldn't pay any taxes on overseas income, for example. Now, a very common thing we see is capital gains. A lot of people leave the UK, sell a company, and essentially make the profit at no capital gains and then move back to the UK. So what HMRC did as sort of an anti-tax avoidance measure, I guess, is put in this sort of rule that if someone leaves the UK and then becomes a resident again within 5 years of their departure, then they will still need to report that sale and pay tax. So we didn't go into capital gains in massive detail, but it's just worth mentioning that if you were to make capital gains, so for example, you sold a load of shares or you have a private company in the UK and you sell that business, if you are non-resident, then that will not be taxable in the UK. So for you guys out in the UAE, it's essentially going to be a tax-free sale. So again, always worth checking on those dates and making sure that if you have made a sale that has not led to any UK taxes, that you check if it is under the temporary non-residence or not. If it is, you need to make sure that you stay a non-resident for the 5 tax years after selling. And that will ensure that the gain remains tax-free when you go back. Because as mentioned, if you were to say move out, make a sale of your company, 2 years, decide to go back home, you're going to have a tax bill to pay at the time of moving in. So just be wary of that from a sales perspective. Similar to that is distributions from your company. So if you're paying yourself large dividends each year or dividends from a UK company, as a non-resident, those are going to get essentially treated as disregarded income, which in short just means that you won't be paying any UK tax on them. But again, if you're to move back in within 5 years, then these would become taxable. So final few sort of helpful tips on the personal tax side is if you are non-resident, so let's say you're living out in Dubai, you're completely non-resident, earning your wages and so on there, you can send money back into the UK. That's not going to trigger a charge. That could be sending back to family and friends. You could be making investments in the UK or just sending to your personal accounts back home. That is completely fine. You can send that income in. Now, that sort of leads on to the next point, which you can see around pre-arrival capital. So if you do decide to go back to the UK, if you think back to when we were discussing sort of the split year tax relief, and there's a split year known as the arrival into the UK. So from the point of your arrival onwards, you are taxed in the UK for, 9 out of 10 scenarios. So what that means is in the non-resident portion, which is up until you arrive, any savings you've got from that time, any earnings you've made, any money you've got, that can all be brought into the UK tax free. And essentially, if you are continuing to receive income, so let's say you come back to the UK from the UAE, but you've got investments there and you continue to make money, you should at that point separate the accounts so that you have one account with all your pre-arrival money and one account with any ongoing income you are getting from overseas. And then you could only start to bring in the pre-arrival capital first. So just a few tips there to be aware of, and hopefully help out. But if you are in scenarios where you're selling businesses or you're looking to make sort of big payments back into the UK, then it could always be worth just having a quick conversation beforehand to make sure that we look at your scenario in detail. But that should cover the majority of cases. And I believe you will get this webinar / materials sent to you as well for extra reading. So the very last thing we wanted to touch on, and we're not going to go into it in major detail, but we have also seen many customers of ours and individuals like yourself out in Dubai do own a UK limited company, few things that they don't know about or you guys forget, etc. But I just wanted to say that even if you've become a non-resident, your company is still a UK business. So the UK still requires yearly, annual sort of statutory accounts and the corporate tax return, which is due at the end of whenever your accounting period is, and also the annual confirmation statement. These pieces of compliance have still got to be done yearly as long as you have a UK business, and it's your responsibility as a director to essentially make sure that they're filed. And one thing we always see, and just to be aware of, if you've got a company and it's dormant, which essentially means there's no activity going on, a lot of people file off their accounts, but you have to remember that you still need to file a nil tax return with HMRC for that business. A short point here is that you can continue to run your UK business as a non-resident. It doesn't have to close down when you leave. The company is a completely separate entity to you, the individual. So even if the director lives overseas, that is fine. But what I did want to point out, which is on the next point, is that if you are living overseas and doing a lot of work for your business, just to be careful of the permanent establishment rules. And what that essentially means is the local government could say, oh, you're running your business from our country now, so you should basically be reporting your profits and company details here. So if that is the case, I know it will be quite a unique situation, as a lot of you guys actually set up new businesses out there anyway. But if you are continuing to run a UK business, just have a chat with a local UAE tax expert just to make sure that if you're meeting any requirements or documents that you may have out there. And then lastly, if you are traveling to and from the UAE, you can claim it as an expense on your company accounts if there's some business reason for that, right? So if you've come back for a board meeting, you've come back for meetings, you come back to see clients, etc., all that travel is a deductible expense on your company books. And as Arj mentioned, you can sort of set up your business filings and the account through our platform. Similar process to what you just saw there on the demo. And once you sort of get through those questions, we'll be able to have a look and get them sorted for you. But again, just if you are in this situation, do feel free to get in touch. So that's it from me and these extra points, Arj, I think, and covers all the content really. So yeah, if there's any questions you'd like, you can ping them through now. But equally, we are going to be sending the material out to everyone who sort of registered, and feel free to have a read of the material and come back to us in your own time as well.
Thanks, Eamon. I think, I guess it's quite an intimate group. So if you do have any questions, feel free to ask them on the chat on YouTube. Alternatively, as well, if you're watching the recording, feel free to message on Facebook or send in a message at tax.co.uk. We'll just kind of give everyone a couple seconds if there are any questions. Otherwise, I think we can wind up the stream in a second.
Perfect.
Lovely. Don't think we have any questions. So all good. Thank you so much for watching live, or if you're watching the recording, thank you as well. Do shoot any questions either on Facebook or at tax.co.uk.
Perfect. Thanks, guys. Cheers.